U.S. stocks closed down on Thursday as the Middle East conflict entered its sixth day, pushing oil prices higher and spurring worries about inflation and whether the Federal Reserve will cut interest rates. Expansion of the conflict to more countries fed fears of disruption in the Strait of the Hormuz, a critical energy choke point where missile and drone threats have drastically reduced tanker traffic. The S&P 500 lost 38.79 points or 0.56%. The Nasdaq Composite lost 58.50 points or 0.26%. The Dow Jones Industrial Average fell 784.67 points or 1.61%.
In the short term, it feels like there's a real focus on oil and supply chains. And so clearly, when you start to see different attacks and questions on infrastructure, key shipping lines, ensuring key shipping lines and routes and assets, the supply chains are being strained. And if oil prices are going up and vols going up, there's a reaction to that as a geopolitical discount rate that is being a bit more elevated today. And we'll have to see how oil shakes out. And clearly, there's going to be uncertainty, and this is a bit day to day and headline driven. I think markets can deal with headlines. Markets have a bit more issues dealing when supply chains get disrupted, because that starts to impact economic activity, GDP, inflation, and that starts to spark more market response. So again, this is a difference between headlines and supply shocks and supply chains.